Hey everyone, welcome back for another deep dive.
It's great to be here.
I'm Lisa, and I'm joined today by automotive and finance whiz Harper.
Happy to be here.
So we're diving into Tata Motors' recent earnings call for Q2.
Yeah, their second quarter this fiscal year.
And looks like the global economy is definitely leaving its mark.
Oh, absolutely. It's the elephant in the room, isn't it?
So let's start there. What's the big picture?
Well, first off, we've got aluminum supply chain issues.
So that's affecting production.
Big time. It's a global headache.
And then, of course, there's China's slowdown. Everyone's talking about that.
It's a major market for the entire auto industry.
Especially for luxury brands, I imagine.
You got it. They've relied heavily on Chinese growth.
So any slowdown there is going to make waves.
It's already happening. JLR in particular got hit hard this quarter.
Jaguar Land Rover?
Yep, JLR.
What were their main challenges?
Multiple things, actually. First, a key aluminum supplier got flooded.
Oh, wow. So that must really messed up their production.
Definitely. They only managed 86,000 vehicles for the whole quarter.
Seriously?
Yeah.
That's way below their usual output.
Absolutely. Any company would struggle with that kind of disruption.
I can only imagine. But here's what I don't get. They still managed to stay profitable.
That's the interesting part. How'd they pull that off, right?
It seems almost impossible.
It points to tight cost control, maybe strategic price hikes.
Makes sense.
Yeah.
But is that sustainable long term?
That's the million-dollar question.
So resilient for now, but maybe not a permanent fix.
Exactly. Now, on top of that supply chain mess, they also had to temporarily hold back around 6,000 vehicles.
Oh, no. What happened there?
Quality control issue. Apparently, it mainly affected the UK and EU markets.
Not good for a car company's reputation.
No, not at all. They haven't revealed the exact problem.
But have they fixed it?
They assured investors it's been resolved.
Okay, so those cars will eventually be sold.
Yeah, they said they'll be out in the next quarter.
All right, so just a temporary blip then.
Hopefully.
You know, something else that seems odd to me is their warranty costs.
What about them?
They're going up, even though their vehicle quality is supposed to be improving.
Ah, yeah. That does seem contradictory.
It is.
Yeah.
How does that even work?
Well, turns out it's not really a quality issue. It's more about the cost of repairs.
Okay, I'm listening.
Inflation is pushing up labor costs at dealerships.
So it's getting pricier to fix things, even if the cars themselves are better built.
Exactly. Repairs are also getting more complex with all the new technology in vehicles.
That makes sense. So the cars are more reliable, but fixing them when something does go wrong is more expensive.
Precisely. And this is something JLR is seriously concerned about.
Rightfully so.
Yeah.
It seems like a tough nut to crack.
For sure. But let's move on to another shift at JLR. This one's more intentional.
I'm intrigued. Tell me more.
Well, it seems they're shifting away from just selling tons of cars.
So not all about volume anymore.
Right. They're focusing more on high-end, higher-margin vehicles.
So a move from volume to value.
Exactly.
And how's that playing out?
We're seeing it in the popularity of their models.
Give me an example.
Like the Defender. It's now outselling the Discovery Sport.
Interesting. The Discovery Sport used to be their top seller, right?
It was. The shift really shows their strategy.
So they're going after that premium market.
Hmm.
But doesn't that limit their overall sales potential?
It could, but the idea is to make more profit per vehicle.
Rather than relying on sheer numbers.
Yep. It's a calculated risk.
A high-stakes game, for sure.
Yeah.
It'll be interesting to see if it pays off.
Absolutely. It's a bold move in such a competitive market.
Speaking of bold moves, their commitment to electrification really stands out.
Doesn't it? Even with all the uncertainty around EVs right now.
It's impressive. They're not backing down from those plans.
Not at all. They're putting resources into electrifying all their brands.
That's a big commitment, especially given the headwinds the EV market's facing.
Especially in China.
Exactly. So how are they handling that?
Well, they're stressing the flexibility of their investments.
So they can adapt as needed.
Exactly. They're ready to adjust to changing demand and tech.
Smart move.
Yep.
Got to stay agile in this market.
Absolutely. All right, now let's shift gears a bit and look at their performance in India.
Closer to home.
Right. Things are a bit more mixed there.
What's the situation?
Consumer demand's been slow, which has affected their profitability.
So not exactly smooth sailing there either.
Not really, but they're focusing on cost cuts to boost profits.
Makes sense.
They're hoping domestic demand will pick up in the second half of the year.
Any reason for that optimism?
A couple of things. The festive season just passed should help.
Right? People tend to spend more than.
And there's also the government's planned infrastructure investments.
So they're banking on those factors to boost the market.
Exactly. Now, speaking of India, We can't forget about EVs.
They've been a major player in that market,
A
right?
dominant one, actually, especially in the personal segment.
And they've managed to keep that strong market share even with competition heating up.
That's right. They're doing well. But there have been some policy changes.
You mean the government pulling back some EV subsidies?
Exactly. Especially those for the fleet segment.
That must have had an impact.
It did. But Tata's adapting by offering various powertrain options.
So, something for everyone.
Basically, they're covering petrol, diesel, electric, and hybrid.
Smart move. Gives consumers choices.
Exactly. Okay, so now that we've looked at the operational side, let's talk finances.
The bottom line, what's the overall outlook?
Well, despite that tough first half, they're actually quite optimistic.
Really?
Yep, they're projecting a strong second half.
To what extent?
They actually expect to be net debt-free by the end of the fiscal year.
Net debt-free. That's ambitious, given everything we've just talked about.
It is, but they're confident.
What are they basing that on?
Several factors. As we said, the festive season should boost demand,
Okay.
plus those anticipated government infrastructure investments.
Right.
And they've also managed to refinance some debt and improve their credit rating.
So they're in a better financial position overall?
Exactly. It all adds up to a more positive outlook.
Makes sense. Okay, but what about JLR specifically? They set some pretty ambitious financial targets, didn't they?
They did, aiming for $30 billion in revenue and an EBIT margin of at least 8.5% for the year.
8.5% EBIT margin. For those of us who aren't finance experts, what does that actually mean?
Sure, it means that for every £100 in revenue, they're aiming to keep £8.50 as profit after covering operating expenses.
Oh, okay. Thanks for breaking that down.
No problem.
But back to those targets. They seem pretty aggressive considering the challenges they faced in Q2.
They do. And even JLR has admitted that hitting those goals will be tight.
So it's going to be a nail-biter of a second half.
Definitely. We'll have to wait and see how it all unfolds.
Well, one thing's for sure, it'll be fascinating to watch.
Absolutely.
This has been a great overview of their current situation.
Agreed. We've covered a lot of ground.
But the story's not over yet.
Not by a long shot. Stay tuned.
We'll be back to dig deeper into the Q&A session from this earnings call.
That's where things get really interesting.
Can't wait to unpack all those insights.
Me neither.
Until then, keep exploring, keep learning.
And we'll see you back here soon.
Okay, so now we're getting into the juicy stuff.
The Q&A.
Exactly. This is where analysts get to grill those executives, dig deep.
It's always revealing. You go beyond the prepared statements.
Get to the real story.
And this was a doozy. Analysts had tons of questions, especially about those ambitious targets for JLR.
Yeah, given all the global chaos, it's audacious.
They went straight for it.
So did JLR address those concerns?
Oh, yeah. Richard Molyneux, their CFO, admitted reaching those goals will need a stellar second half.
Okay, so a lot riding on the next few months.
But he's optimistic. He pointed to a strong order book and easing supply chain issues.
So they've got the demand. Hopefully production can catch up.
That's the bet. But there were also questions about those 6,000 vehicles on hold.
The quality control issue.
Right. Molyneux assured everyone it's been fixed.
Good. So what was the problem exactly?
Apparently a specific part needed more testing.
Okay, so just a hiccup then?
They're sourcing the parts. Those vehicles will be sold next quarter.
All right, glad that's sorted. But those rising warranty costs still bug me.
It's a head-scratcher.
Did they offer any more explanation?
Molyneux clarified, it's not about quality, it's about cost.
Okay, so elaborate.
Inflation's driving up labor at dealerships.
Makes those repairs pricier.
Exactly. And repairs are also getting more complex as cars get more high-tech.
So even if the cars are more reliable individually, those repairs add up.
That's it. And JLR's working on solutions.
That's good, because it seems like a growing problem. Now let's switch to India.
To their home turf.
What about their commercial vehicle business? That market's got its own issues.
With the slowdown and rising interest rates,
What insights did they share about that?
Girish Waugh, an executive director, pointed out the entire commercial vehicle industry's struggling.
So not just a Tata problem.
Nope. Reduced infrastructure spending, mining slowdown. It's a ripple effect.
But are they just accepting this fate?
Definitely not. They're strengthening their dealer network.
Okay, so expanding their reach.
Right. They're also launching products tailored to specific segments,
And anything else?
ramping up digital initiatives for better customer engagement.
So a proactive approach to adapt?
Absolutely.
But I've read about banks tightening lending norms.
That's right.
Is that making it harder for people to buy commercial vehicles?
It is Hua admitted there's stress in financing, especially for smaller vehicles.
Oh, it's a solution.
They're working with financiers to create innovative schemes.
To keep those loans flowing.
Exactly. Now, on to the big one. Electric vehicles.
Right. They've been pioneers in India, but those policy changes must have shaken things up.
The subsidy withdrawals. Yeah, analysts were curious about their response.
So how are they adjusting?
Shailesh Chandra, MD of their passenger vehicle division, tackled that.
What's the point?
He admitted the challenges, but he's still optimistic about EVs in India.
But the market's taken a hit.
True, but he pointed out they've actually maintained their market-leading position.
That's impressive. How are they pulling that off?
Well, they're still investing heavily in new EV product development.
So not slowing down.
Not at all. Plus, they're expanding their charging network.
Smart. And working with the government.
Definitely. Pushing for policies that support the whole EV ecosystem.
Multi-pronged approach.
Yeah.
They're in it for the long haul.
Exactly. They see EVs as the future.
And they want to lead the charge. You know, one recurring theme I noticed was cost reduction.
Oh, absolutely. It came up in every business unit.
It's like their mantra.
It is. They're obsessed with efficiency.
Which makes sense in these uncertain times.
They talked about optimizing material costs, streamlining production.
And leveraging their global scale to get better deals.
Right. It's a comprehensive strategy.
And it seems to be paying off.
How so?
They mentioned offsetting some price discount impacts through cost cuts.
So it's having real results.
Exactly. Proof that it works. Another thing that kept popping up was new product launches.
They've got a packed pipeline.
In both traditional and EV segments.
It's generating excitement. That new curvy SUV is making waves.
It is. But these launches aren't just about expanding their offerings, right?
Nope. They're about pushing the boundaries of technology and design.
So innovation is key.
Absolutely. Okay, one last thing. Given China's auto slowdown, what's their plan there?
It's a tough market.
Molyneux emphasized their focus on the premium segment.
Makes sense. Stick to their strengths.
Right. While the overall market's struggling, the premium segment's doing better.
So they're doubling down on what works.
Plus, they're investing in brand building and customer experience in China.
To solidify their position?
Exactly. It's strategic. They've really thought this through.
They're facing tough challenges, but they're tackling them head on.
With a clear, determined approach.
This Q&A has been enlightening.
We've gained a deeper understanding of their strategy.
It's fascinating to see how they're navigating this complex global landscape.
It truly is.
Wow, we've really covered a lot today, haven't we?
We have. It's amazing how much you can glean from just one earnings call.
It is. It's like peeking behind the curtain of a global giant.
Exactly. So what was your biggest takeaway from all this? What really stood out?
Tough question. There were so many interesting points. But I think what surprised me most was JLR maintaining profitability with all those production hiccups.
Yeah, that was impressive.
It really shows their commitment to cost control.
And the power of their brand.
Absolutely.
Yeah.
For me, the most fascinating part was their shift from volume to value, to gamble.
It is a bold move, for sure.
Especially as they're moving towards electrification. It makes you wonder what they'll come up with next.
It does. And that's a question for you, our listeners. What were your aha moments? What surprised you? What are you pondering?
Exactly. Because that's what these deep dives are all about. Sparking curiosity, getting you thinking beyond the headlines.
It's not just about absorbing information. It's about asking questions, digging deeper.
For example, we touched on China's auto market. But there's so much more to explore there.
Like how the rise of Chinese EV makers will impact global players.
Right. And what those changing consumer preferences mean for the entire industry.
Big questions, for sure. And then there's the global EV market as a whole.
With battery technology, charging infrastructure, government regulations, it's constantly evolving.
A whirlwind of challenges and opportunities.
And of course, we can't forget the big picture. How will they navigate the global economy while balancing growth, profitability, sustainability, and innovation?
A lot to juggle.
It is. But that's why we love these deep dives. They help us make sense of complex issues.
Give us the knowledge to understand the world around us.
Exactly. So remember, the learning never stops. Keep exploring, keep questioning.
You keep those aha moments coming.
And if you enjoyed this deep dive into Tata Motors, don't forget to like, subscribe, and share with your friends.
We'll be back soon with another fascinating topic.
Until then, keep learning, keep exploring, and keep those engines running.